Today on the World War Bitcoin podcast, I just want to once again throw out my heartfelt prayers for those of you in the Ukraine. If you are listening and you have been affected by this, which I do know that there are listeners all around the world, we are thinking about you. Those of us, the eyes are on the Ukraine. We hope that you stand strong and that you stay safe. And as far as price action is concerned, how does that affect Bitcoin, cryptocurrencies, the stock markets? Are we seeing a decoupling with crypto and the stock markets? It seems like maybe. And what kind of effect on the crypto markets is the fact that the Ukraine is accepting donations going to have on the global financial gradually and then suddenly? Will this accelerate the suddenly? All that and more coming right up. All right, so as I am looking at my computer screen right now, I see an article on CNN.com. Not the biggest fan of CNN.com, but it says Kiev struck as Russia warned residents to leave. Thoughts and prayers absolutely with those of you in the Ukraine. If anyone from the Ukraine is listening, or if you know anyone in the Ukraine, just would love for this conflict to come to an end. Absolutely. And I've been asked questions about Kiev, specifically about Kiev with Russia, and what happens to the charts if Kiev falls. And from what I understand, based off of not being able to really understand the significance of it entirely, the thing that I understand is basically this is going to be bearish for everything, for stocks, for crypto, and everything like that. That this carries with it a significant amount of weight, that even more so than just the fact that Russia has invaded the Ukraine. So we'll see what happens with the charts. I am not necessarily a bull or a bear. It's wait and see. We've seen some great price action the last few days. That is great to see from our perspective, as our lives are currently not affected by this. Of course, if you're a Ukrainian resident, who cares about the price of Bitcoin? But for those of you listening to the podcast or listening to this on YouTube, that's what we're going to talk about. And so as we get into this, there are a few things, because I have talked about Russia over the last few weeks. 2 weeks ago, I said that it wasn't priced into the charts, and it wasn't. That, what we actually saw was a little bit of bullishness as Russia was supposedly withdrawing troops from the Ukrainian border. But over the weekend, and this is what I shared in my last week's podcast, what we saw was, I thought personally that it was getting priced into the charts. The invasion was getting priced into the charts because we saw some weekend volatility that we had never really seen before. To an extent, when you see volatility on the weekend, when you see a price dump, that means that the news is about to tell us something. Or if you see the price rise significantly, but you don't hear of any major news events, that means the news is going to tell us something. Otherwise, the price of Bitcoin will generally trade within a range and open at a CME futures point. And so as I was processing all of this, I did talk about wag the dog. Is the tail wagging the dog right now? And I want to give props. I want to be unbiased here. And that's hard for me with this current administration. I am not a huge fan of the current administration, and I am not a diehard Republican. This current administration, and the next one is probably going to be worse, whoever it is, it's just, I'm not a fan. But props to where props is due. I actually read an article on CNN.com that was describing, and it was, I will be very clear about this, it was very biased. It was an opinion piece. The opinion piece that I read on CNN.com was very biased in favor of Joe Biden and in favor of the White House, and saying that they were on top of this. They were giving us live updates of everything that Russia was doing. They had no ulterior motives other than to give us what was going on, and they were right about everything. And so props to the White House. They had no ulterior motives. Now, as far as the media is concerned, that's a different question, because I would say that the media has an incentive to drum up as much fear as possible. And so we see this with, I don't read CNN.com a lot. I've never been to MSNBC.com. I mean, maybe to click on some random article that I Google. I don't pay Fox News. I'm just not really paying attention. But I can tell during my live streams whether something is really being drummed up as a big deal. In August and September, it was Evergrande in China. And over the last few months, it's certainly been Russia and the Ukraine. And so we've seen charts, right? I've shared this on different platforms. We've seen charts that perhaps buying the invasion financially is a good idea. And I would say that, yes, buying the invasion over the last several, invasions based on different wars, different battles that things have gone on, that the fear is sold beforehand and then the invasion is bought. And we have seen a buy the invasion so far type thing play itself out. The price of Bitcoin got down to under $35,000 last week. And what was that? That was a selling of the fear. And if you remember that day, I believe it was last Wednesday or Thursday, when everyone was terrified. The invasion was on. Everyone was terrified. And I think a lot of people were expecting that they would say that anything was on the table, that $20,000 Bitcoin was all on the table. And what happened? Well, the smart money zagged when everyone else zigged, as usual. At the moment of peak fear, we saw the biggest volume day since December 4th. The infamous liquidation, that major liquidation event that brought us down to $42,000. We saw the biggest, highest volume day. That is usually what happens, basically. Peak fear, that is the time to get in, and people, smart money, that was their time, and I hope you didn't sell them any of your cheap Bitcoin or Ethereum or whatever altcoin. Luna, oh my goodness, Luna is looking amazing right now. What a recovery for Luna. But I'm not going to talk about that in this podcast. What I do want to talk about, I made a YouTube video about this yesterday. And so if you're listening to this on YouTube, watch my YouTube video from yesterday. If you're listening to the podcast, I'd encourage you to watch my YouTube video. The Ukraine. So we have Russia with SWIFT getting removed from SWIFT, and it's a thing of its own. But I don't know. My answer, I've gotten questions about the effects of Russia and SWIFT. I don't know the ramifications. I don't know what Russia's going to do. Does anyone really know what Russia's going to do? They're kind of, they're unpredictable right now. And I'm even hearing reports that Putin might be losing favor, might be losing a grip on the power that he has. And who knows, maybe he's feeling that. And so maybe he'll become unhinged. Whatever the case, I would say that is unpredictable as far as what that means for crypto as of right now. And there's a variety of opinions, bullish, bearish, crabbish, whatever you want to call it. We'll see. But one thing that we can see is the Ukraine. So Ukraine tweeted it's now accepting cryptocurrency donations. And within 2 days of accepting cryptocurrency donations in Bitcoin and in Ethereum and in Tether, $12 million worth of crypto came in from around the world. And last I checked, I saw one single $5 million donation, bringing that up to what? $17 million at least. I mean, that was within the first 2 days that it got to $12 million. And so we can see the tweet. It's been verified. It's been shared by government officials all over the Ukraine with a Bitcoin and Ethereum wallet address. And this, in my opinion, as I shared in my YouTube video, is so much more bullish than just $12 million or $17 million of donations being poured in. The ramifications of this on a global stage, you know the saying, gradually then suddenly. I'm convinced that other countries around the world are looking at what's going on in the Ukraine, and they're looking for opportunities to get into an asset class that they weren't quite familiar with in cryptocurrencies, to be proactive. If there is a specific country that is facing or is afraid of one day potentially facing any kind of invasion, any kind of conflict coming in from another country, that they would be prepared, not just in foreign currencies, not just in gold or in the US dollar, but in cryptocurrencies. Because for the Ukraine, imagine if they were asking for gold right now. Just how difficult would it be? It's impossible. It is 100% impossible for the Ukraine to be receiving gold from other countries. How difficult is it for them right now to receive wires from other countries? It is more difficult than with cryptocurrencies. Cryptocurrencies are much quicker. They're much cheaper to transact with. They're much safer. There is no potential hack. Their wallet address, I mean, think about this. The Ukraine made their wallet address public, available for everyone across the globe to see. And so Russia can see that, but what can they do with with Ukraine's Bitcoin wallet address? The only thing they can do is donate. They can't do anything else. And so this is awesome branding for crypto right now, because I mean, come on, guys, you guys know the branding that is tried to be, people are trying, especially politicians who don't want to lose their power. They're trying to float out this idea that crypto is mostly used for money laundering, for funding of terrorism. And what are we seeing right now? Well, we're seeing pretty much the exact opposite happening right now, where not a political statement, but what's going on? We are doing the opposite. We are funding those who are being terrorized. And what a global effort to help the Ukrainians in their moment of need. And so this kind of branding can certainly be a catalyst that can bring about the then suddenly aspect of this. And so we have this. We have the Ukraine. We have several catalysts, but this has a potential to be a short-term catalyst. What if some random country in the world is like looking at this and like, all right, we need to add Bitcoin and Ethereum to our holdings yesterday? And what if multiple countries are doing that? And what if they're just at the very least, a lot of them are probably like, all right, we need an official national Bitcoin address, an Ethereum address right now. We cannot wait. And there's just so many possibilities as far as the suddenly coming. Now, I'm not talking about days. I may not be talking about weeks, but suddenly may be here sooner than we realize. There's for sure about that. And just to recap, a new catalyst. What's going on in the Ukraine right now can be a new catalyst to elevate the crypto market. And dare I say, I've been seeing some decoupling going on between cryptos and stocks. Now, I haven't checked the stock market, the Dow, the S&P since this morning when I woke up, but Dow futures were looking bleak. And yeah, look, oh my goodness. Whoa, I did not realize how far down. So the Dow is down 724 points right now. The NASDAQ's down 220 points. S&P's down 79 points, between 1 and a little over 2% for those three major indices. And what's up with crypto? So Bitcoin is up. Bitcoin's up $700. Are we seeing some kind of decoupling going on right now as we're seeing a potential catalyst or some kind of bullishness forming with crypto? I mean, time will tell. We'll see. But my morale personally has been lifted. What does that mean for short term? Who knows? But for medium and long term, yes, that makes me pretty excited. That makes me bullish. And so we'll see. Yeah, we'll see what comes of this. Now, a few important things to talk about, to look at. So I've been following cohorts. I've been following addresses, wallets of all sizes, adding or distributing Bitcoin to and from their portfolios. And I do have a little bit of a differing of information based on different time scales, but I can see how it all fits together based on information from Glassnode.com or Ecoinometrics. And so here's the gist of what's been going on. Bitcoin, when it first got down to the 40s, the lower 40s, at the end of in January, we closed at 48,000 or something like that for the year. But in January, got down to the lower 40s. Smaller wallets are continuing to add. They just continue to add to their stacks. They are aggressive. They are adding. They're continuing to, that's going to go on, I think, forever. But whales, they started to get aggressive around the time that Bitcoin first got down to the lower 40s. And then when it got down to the 30s, they got very aggressive, and especially the wallets between 1 and 10,000 Bitcoin. And then, we went up to $45,000, couldn't break through that, had a wick above it, but couldn't close even a 4-hour candle above $45,000. And we saw a lot of that buying, that new energy into this starting to cool off. And we went back down to the 30s. And I personally, side point, I am convinced that if the Russia thing wasn't happening, that we wouldn't have gone down to the 30s. But that was an attempt to sell the fear before buying the invasion. And so we went back down to the 30s for Bitcoin, and wallets started to add again. And so conflicting information here, but I think that you can, if you think fourth dimensionally about this, you can put the pieces together. The Glassnode chart shows that over from December until today, that on different scales of things, that wallets were largely accumulating, except for the very largest, the 10,000 plus wallets, that they weren't quite accumulating, but everyone else was. Econometrics tells a different story, and so it's one of these things. It's like, who are you going to believe? But they would say, and I do tend to agree with Econometrics here, that really the wallet addresses that they started adding sometime when Bitcoin first got down to the $40,000 range. Now, here's how the pieces can fit together. If you look at these charts, you can find them all on Twitter, and look through my liked tweets. You can find some of these charts there. If you put the pieces together, the Econometrics chart is it's a 30-day average. And so what he's seeing right now is an average over the last 30 days. That includes several days of Bitcoin being above $45,000 or being above $40,000 when it cooled off. What you'll see on his chart over the next week or couple of weeks is more red dots, which red is good on that chart. And unfortunately on the Glassnode chart, blue is good and red is bad. But on the Econometrics chart, red is good. And what you're going to see as Bitcoin went back down in the 30s is some more red dots coming. And so the blue dots, given it's the 30-day moving average, shouldn't be surprising considering the fact that buying slowed down, it stalled when Bitcoin was in the $40,000 range. Now, I want to talk about briefly some price action. This may end up being my shortest podcast. We'll see. But price action right now. So finally, since what day? I believe it's December 28th, December 27th or December 28th, Bitcoin has finally once again touched the 21-week 21-week EMA, the exponential moving average. So Bitcoin today touched that for the first time in over 2 months. And that's an exciting thing. That's something to celebrate, that we have made our way back up there. You know, the moving average is coming down, but hey, we've had an interaction with it. And I have been saying for weeks, I think I even said this last week, that I would want the 21-week EMA to get below $45,000 so that when we test it, we don't have this double barrier of $45,000 and the 21-week EMA. So we saw the test today. Bitcoin got up to about $44,700, got rejected there. And I've been saying this, guys, this shouldn't be a surprise to you. I've been saying this for weeks. For us to have our first interaction with the 21-week EMA in over 2 months, yes, we're going to get rejected there. And guess what? I opened a short. It was the easiest short. I closed it already. It was the easiest short that I've ever made. It was going to happen. And so now here's my ideal scenario. We got rejected there the first time. Maybe on the second move up, we can go up there and not get rejected. We can break through. We'll break through a little higher on a 4-hour candle. On my chart right now, it's a daily candle. I prefer daily candles, but on a 4-hour candle, break through it, have a close above the 21-week EMA, hold it as support, come back, test the 21-week EMA, hold it as support, before moving higher to the 382 fib, but probably the next key level, in my opinion, would be the 20-week SMA, which is currently at a little under $50,000. And that is also obviously coming down. And so I got a question on Twitter today. What do we need to be bullish? When are we bullish? You know, is it $46,000? That was the specific question. Can we be bullish at $46,000? And my answer was, oh man, no, not quite. Let me expand the chart. So here's my line of thinking as I'm processing this, because I would love to just at any point just flat out be bullish, just 100, just I'm in, we are going to the moon. But there's so much resistance ahead, and I've talked about this a ton. But even if we break through every level of resistance, I'm probably going to turn bearish unless the volume indicates that there's a reason to be bullish. And so, okay, here's the deal. the 382 fib, the 20-week simple moving average, the zero point 0.5 fib, those are all going to be levels of resistance. The 618 at $55,270 is going to be a major level of resistance. The 702 at about $58,000 is going to be a major, even more so, major level of resistance. And so what happens, we'll get rejected at the 618. If we break through that eventually, we'll get rejected at the 702. What happens if we get up to $60,000, which is above the 702, but then volume is low? Well, then I'm a bear. That's it. We're going right back down. But personally, I think what's going to happen is that we're going to get up to somewhere in the 50s and then maybe make our way right back down to the 30s. And here's the question that a lot of people are going to ask. Will we have some kind of huge alt season if Bitcoin gets to the mid 50s? That's above the bull market support band, in which, in my opinion, when Bitcoin is above the bull market support band, that's generally a good time to be buying some alts. But right now, under the bull market support band, I would not say that it's a good time to buy alts. But let's say that we have some kind of major full-blown alt season. I think it's over. Pack your bags. 2024, next halving. But what I think is going to happen is that if Bitcoin gets to more like when Bitcoin gets to the mid 50s, that we're not going to have a full blown alt season, because in the big reason why, in my opinion, is that it's not over. And I am more bearish on most alts than I am on Bitcoin and Ethereum right now. I'm bullish. I mean, Bitcoin at $43,750. I'm bullish on Bitcoin. Ethereum at $2,900. I'm bullish on Ethereum. But, especially if we just spend most of our time in this $35,000 to $45,000 range with a few moves above or a few moves below. And if I think that we're going to go up to the 50s and then go back down to the 30s, that's going to be bloody for the alts. And, I talked about this last week. Let me bring it up again. Bitcoin's dominance is not, if you were to go to coin360.com and take a look at Bitcoin's dominance, it's misleading, because that includes stablecoin dominance. But that is how a lot of people cash out of their cryptos today, is stablecoins. And so that's not money, that's not crypto being taken off of the table, being taken out of the market cap. That's being cashed out into stablecoins. And so stablecoin dominance rises and Bitcoin's dominance stays in the lower 40s. I calculated this last week. I didn't calculate it yet this week. But Bitcoin's actual true dominance without stablecoins, in my opinion, I would say that's true dominance, is somewhere around 47%. And I wouldn't be surprised if you move stablecoins from there, if Bitcoin ranges for the most part over the next several months between $35,000 and $45,000, that Bitcoin's dominance would rise well over 50%. Stablecoins have just introduced a really interesting wrinkle when it comes to dominance lately. Now, what does that mean, for the next several months? Guys, I've been clear about this. I do not think that $69,000 was the top for Bitcoin for this cycle. I don't think that $4,800 was the top for the cycle for Ethereum. I believe that we do need some kind of black swan event not a black swan event, the opposite, a catalyst to ignite a rally to get us higher. And I do think that that's going to happen before the next halving. But as far as when, all right, I've said it before, I'll say it again, the earliest that I could picture that would be sometime in late of 2022 or early 2023. I would be delighted if it was sooner. Maybe this Ukraine thing is just going to lift the entire market, bring a lot of energy in. We'll see. We will see. But there are potential black swan events too. So it's just, man, what a wild ride that we are going to be on over these next several months. But by no means do I think that we are in full-blown bear market territory. No, by no means. And this is the last thing that I'll say, but I saw somebody, I see this on Twitter a lot, people knocking illiquid supply, saying that it's worthless. And here's the deal. And the reason why is because at any point, and this is true, at any point, somebody could make billions of dollars of Bitcoin from turn it from illiquid to liquid. Yes, but here's my counter argument to that. In 2017, we saw that happen very clearly. And in early 2018, we saw Bitcoin supply turn from illiquid to liquid very clearly, and that marked the end. When we got to $69,000, I made this video. I don't regret it. When Bitcoin got to $69,000, the largest whales, the biggest cohort of whales, bought very aggressively, and they have never done that at a top. And so my big saying at the time to try to calm everyone down is whales don't buy tops. And if $69,000 was the top for this cycle, then this will have been the first time ever that whales bought the top. But they're smarter than that, and they were not selling, they were buying, and long-term holders were not selling. They were accumulating. Well, no, they were distributing a tiny bit, but not an amount that is indicative of a macro cycle top. And so an argument that it is over, that pack your bags, it's time to wait until 2024, I believe that holds no weight, and you will see over time. If you're skeptical of that, you will see that over time play itself out. So, all right, that is all I have for today. I hope you enjoyed. I would greatly appreciate it if you give me a review in Spotify or in Apple. Thank you so much to everyone who has. Last time I checked, I have 10 reviews with a 4.9 rating. How dare you, that one person who gave me a 4-star review? No worries. But thank you all so much for your support, and I will see you in another video, another podcast on different platforms as time goes on. Stay safe out there, especially for those of you in the Ukraine. Peace.